Welcome, ladies and gentlemen. My name is Steve Torsa. I'm the founder of Wholesale Investor. I'd like to say welcome to our Small Cap Showcase 2023. So what a lot of people don't realize is actually Wholesale Investor has been working with small caps since 2009, right? And this has been such a key area for us. In fact, 8 out of the 10 companies that we've seen go on to become unicorns has actually come from being small cap listed companies that have actually grown over time. So we're super excited to actually bring you today's showcase of some exciting companies that are coming up. And do you know what's even more important is that from a timing perspective, we all know that 2022 and even the early parts of 2023 have been some of the most challenging when it comes for the small cap listed companies. What that means from an investor's perspective is it does create an opportunity. Some of the valuations we saw these companies get 2020 and 2021 basically have now come back significantly, thus creating the investment opportunity. When we were actually setting out our plan and agenda for this year, small caps were going to be a strong focus for us because we see the investment opportunity from your perspective. Because the reality is over the next 2 to 3 years, what we're going to see is some of these companies have been doing great work, achieving milestones, building momentum in lots of different directions, whether it be their programs, whether it be their traction, their revenue, etc. We're going to see that be reflected in the listed markets in multiples. And that's an important thing to be focused on from an investor's perspective. So enjoy today's Small Cap Investor Showcase. I look forward to chatting with you at the end.
Thank you, Steve, for setting the stage. Welcome, everyone. I'm Rhythm Gupta, your host for today, and I'm thrilled to guide you through this exciting event. Without further ado, let's dive into our lineup of exceptional presenters. Our first presenter is Imugene, ASX ticker IMU, a pioneering biopharmaceutical company dedicated to the development of immunotherapies. Joining us today is Leslie Chong, the CEO and Managing Director of Imugene. Leslie's visionary leadership has been instrumental in driving Imugene's groundbreaking research and bringing hope to patients worldwide.
Thank you so much for having me. I am delighted to talk about Imugene. So Imugene has several different things going on. We've got 5 unique assets. All of them are in the clinic in cancer research and development, except for the CF33CD19. We call that onCARlytics, and that is due to be in the clinic as early as end of this year. We have 3 unique platform technologies. We already have 3 scientific collaboration. We're addressing many solid tumor types. So this is cancer in solid tumors. We have roughly about 9 clinical studies either already started or are about to start in the clinic. All of those studies are ran under an FDA IND. We already have 2 supply agreements from major pharmaceutical companies. So Imugene is squarely in the immunotherapy space for cancer, and we're specifically in oncolytic viruses and cancer vaccines. So if there are 5 different methods of addressing immunotherapy in cancers, we're already addressing in that viruses and vaccine category. 3 unique platforms, as I said. onCARlytics is the revolutionary medication that will enable every solid tumors to be seen by what's called a CAR T. So in that combination, we obliterate any kind of solid tumors. We have CF33 oncolytic virus, CheckVac, which is currently in triple negative breast cancer, which is the worst kind of breast cancer that one can have. And then Vaccinia is in multiple solid tumors. So doing a lot of work within a multitude of solid tumors. Our B-cell immunotherapy, HER-Vax, is read out a phase 2 positive data, and our PD-1 Vax is in non-small cell lung cancer, and we are going into a combination with that. First of all, our oncolytic virus, it is a virus that loves to infiltrate into every known cancer type. It replicates only in cancer cells and then imparts that love onto others. And we've seen this again and again in our triple negative breast cancer study. We're currently in cohort 3, we're dose escalating up and ensuring that the power of our oncolytic viruses are working in a triple negative breast centers. We already published some of our data at the San Antonio Breast Cancer Symposium. This MASS study that it's called Metastatic Advanced Solid Tumor Study, the MASS study with vaccinia. It's an intratumoral, it's an intravenous, and also IT again in combination with Keytruda, and IV again in combination with Keytruda. We're already in cohort 4 in the intravenous arm, and then intratumorally, we're currently in cohort 3 and just about to dose escalate into cohort 4. We're already seeing significant signals within these cohorts that I'm pleased to see. And then IT and IV in that combination going up in the dose and then combining with Keytruda in multitude of solid tumors. So we know that our oncolytic virus works in solid tumors. It only replicates in that. So the idea of combining with something that's targeted, so these CAR T molecules that are already approved are proving in blood tumor types, which is roughly about 10% of cancer types, anywhere between 53% to 98% curative rate. We have not seen this in solid tumor, and the idea of bringing it into solid tumor is a reality now, where our oncolytic virus infiltrates into every known tumor cells and then replicates and shuttles up or flags a CD19. When you add a CD19 CAR T or a bispecific, you then create the endogenous T cell recruitment. So you create one disease into your solid tumor and then add a CD19 directed CAR T. So this is a cartoon drawing, and it's simplified in that our oncolytic virus infects solid cancer cells, shuttles up CD19, paints the cells with CD19 as it were. You add a smart bomb that is directed toward a CD19 and obliterates that cancer type. So this is first in class, best in class. We just received FDA IND, and we're going straight forward into putting this in patients. We've already published this at the largest immunotherapy conference with 3 different combinations. And our B-cell immunotherapy is already proving that it works with low side effects or no side effects. So adverse events very minimal, low toxicity profile. And this is a means of creating a vaccine towards a certain kind of cancer target. It's not, it's a passive immunotherapy versus active immunization. So we're treating patients that already have a HER2 positive malignancies and non-small in gastric cancer. We've already proven this in a phase 2 study, and it was randomized against a standard of care chemo. We gave almost a 6 months differential in survival outcome, and our hazard ratio was at 0.55, which is gorgeous to see. Our PD-1 vax works in the same way. It's a vaccine against a PD-1, and we've already dose escalated into 100 microgram. We just announced a combination with atezolizumab or Tecentriq from Genentech Roche and our PD-1 vax. In the combination, we are going into treatment naive as well as well-advanced patients. Across the next few months to up to a year, there's a speckling across all our programs in terms of value inflection points. Our biggest shareholder is Mr. Paul Hopper, and we have the Vanguard Group as well as State Street Corporation and BlackRock on our registry, and as well as the Mann's family. I'm back to where I started, where we have 5 unique assets all in the clinic getting that data, and one just about to go into the clinic. And this is one of the most exciting programs in cancer therapy. 3 unique technology platforms. We're addressing a multitude of solid tumors. 3 scientific collaboration already fruiting that data, 9 clinical studies going or about to start, and 2 supply agreements with major pharmaceutical companies. Thank you.
Thank you, Leslie. Next up, we have IMAGION BIOSYSTEMS, trading under the ASX ticker IBX. The company specializes in innovative imaging solutions to detect cancer at its earliest stages. Please welcome Robert Prue, the President and CEO of IMAGION BIOSYSTEMS. Robert's expertise in the healthcare sector has propelled the company's mission to revolutionize cancer diagnostics.
Good day. I'm Bob Prue, Chairman of IMAGION BioSystems. It's our pleasure to be participating in this edition of the Wholesale Investor Conference. IMAGION BioSystems is an ASX-listed biotech company with its R&D organization located in San Diego, California. We are focused on developing our proprietary nanoparticle technology to improve medical imaging for the detection of cancer and other diseases, as well as use our technology as a platform ultimately for the delivery of drugs and therapies. I don't think I have to tell our investors that detecting cancer is a global unmet medical need. We spend hundreds of billions of dollars annually to try to diagnose and detect cancer, and yet it continues to be a leading cause of mortality and morbidity, killing more than 9 million people globally annually. So why is that? Today, we have 5 different ways to image the body, none of which are easily able to tell you the difference between a benign mass and a malignant form of cancer. We're all familiar with the use of mammography to try to screen for breast cancer, and you see a spot, but is it a fibrotic mass, or is it actually a malignant form of cancer? While ultrasound is used today as the standard of care to try to identify ovarian cancer, the problem with ultrasound is that it requires billions of cells before it can identify a mass. And by that time, it's usually very late stage and too late for the patient. Magnetic resonance imaging and computed tomography have high resolution images, but they still can't tell you whether what they see is anything more than a suspicious lesion or a region of interest. And improvements in positron emission tomography or PET scanning have really come a long ways, but PET scanning isn't available in many parts of the world, and it can often be very expensive. So how is IMAGION going to try to change that picture? By enabling a molecular imaging. MagSense technology aims to transform how we use medical imaging to detect and diagnose cancer. Instead of a radiologist looking at a conventional image and looking at that to see there's something suspicious there, with our MagSense nanoparticle technology, we'll actually be able to see a magnetic signature or molecular signature associated with the presence of our particles. Our particles are highly specific for various types of cancer and can then be used in a conventional imaging approach to see a magnetic signature associated with our particles. So how does that actually work, though? We use a targeting molecule attached to a magnetic particle to get the specificity. So for each type of cancer, we'll have a different type of targeting molecule, a peptide or an antibody that's highly specific for the type of cancer. That allows the particles to then affix to or bind to the type of cancer that we're looking for. So patients are injected with a low dose of the nanoparticle imaging agent. The particles will then circulate and try to find and identify a tumor. If the tumor is present, the particles will bind, and then that particle will be detectable in an MRI scan. If there's no cancer, the particles will harmlessly circulate and eventually be taken to the liver where they'll be metabolized. And what's very nice about the particles compared to use of a radioactive tracer is that the components of our particles are all normal components or normal things found in human biology. And the iron oxide core of our particles is repurposed, if you will, by the liver and turned into ferritin, which is used for hemoglobin production. You can imagine that this approach can be applied to a large number of different types of cancer. And so from a business perspective, we have broad commercial applicability. We can develop imaging agents for many types of cancer, finding a specific targeting molecule that's highly associated with each type of cancer. And the imaging agent can be used at multiple stages in identifying cancer. So it can be used to identify the primary tumor. It could be used to stage the cancer, could ultimately also be used for monitoring the effectiveness of therapy. So each imaging agent creates a consumable stream with multiple opportunities for the agent to be used in the medical process. Our first product, or our most advanced product, is for the detection of nodal metastasis in HER2 breast cancer. We reported our first results at the San Antonio Breast Cancer Conference in December of last year. And there we've been able to report that there have been no safety or tolerability issues related to the imaging agent, and that the imaging agent is detectable by multiple imaging modalities, most importantly by MRI. We've just last week announced that the enrollment for that study has been, objectives have been met, and that we'll begin to close that study out by the July 31st of this year. Let's take a slightly deeper dive into what we've actually seen with that study. On the right-hand side, you can see an MR image of a patient's lymph node. And in the top, you can see what that image looks like prior to being dosed with our particles. Whether that's by ultrasound or by MRI, a radiologist might look at that and say, that node looks suspicious because it's enlarged, but they can't actually tell whether or not that is has tumor metastasis in it. After the injection, that is post-dose, what you see then is that our imaging agent enables the molecular signature because you see a change in the image contrast, a darkening or spotty pattern associated with the presence of our particles. And so we, by the use of our MagSense technology, we go from looking at a node that might be suspicious by its size and shape to actually adding contextual information for the radiologist to know whether or not there are tumor cells present. And so by working with conventional MRI systems, we fit in with the existing workflow of standard of care and how patients are evaluated, but we add context for the radiological review that goes, again, from being something that I suspect there might be a problem to actually I can determine whether or not there's nodal disease or not. And this would ultimately potentially save significant dollars in the healthcare system because we could potentially eliminate unnecessary biopsies in patients that have healthy nodes versus those where we identify there is a patient that has metastatic disease, and that can then alter the course of treatment. So what does it look like going forward for us? Presently, as I said, we are planning to close out that phase 1 study, and that then moves us in the direction of filing an IND later this year for a multi-site phase 2 study, primarily focused in the United States. We have a robust pipeline for additional cancer imaging agents that we're planning to move forward, particularly in prostate cancer and ovarian cancer. But most importantly, I think the news from last week was that we've welcoming our new CEO, Isaac Bright, who we are really looking forward to joining in his leadership skills and bringing us into our next phase of development and growth. Thank you for allowing us to participate in the meeting.
Thank you, Robert. Our next presenter represents Radiopharm Theranostics, ASX ticker RAD. Radiopharm Theranostics is a leader in precision medicine, developing targeted therapies for cancer patients to improve treatment outcomes. Guided by CEO Riccardo Canevari, the company's commitment to innovation and patient care drives them forward.
Hello, everyone. I'm Riccardo Canevari. I'm the CEO of Radiopharm Theranostics. We are a biotech in a preclinical and clinical stage listed on the ASX, and our focus is really to develop innovative medicine in radiopharmaceutical. So radiopharmaceutical is considered the most interesting and probably fastest growing segment in oncology. Recently, there has been successes in prostate cancer with Imugene and therapeutic. And you can see how the quarterly sales of both products are really growing significantly. And this is creating a lot of enthusiasm in the space. Well, we were, of course, aware of how successful can be those technology. And that's why we decided to create Radiopharm Theranostics. And the team that we were lucky to hire has a deep expertise in radiopharmaceutical. The molecule that we have in our pipeline are really differentiated versus other companies in the space. And I believe we do have a unique business model. We really are investing all our funds in R&D. We are a small team, so we have a very low expenses from a SG&A point of view, because our aim is really to accelerate clinical development. So if we look at our priorities within our pipeline of radiopharmaceutical, we have 2 imaging agents, the 2 at the left and at the center. So Pivalate is an imaging agent for brain metastasis. Plivexin is an imaging agent for pancreatic cancer. And then we have 2 therapeutic molecules that we plan to develop in PD-L1 and HER2 cancer. This is a different way to see our pipeline, so you can see how the different stages of the development are now happening. So our most advanced technology is called Pivalate, imaging agent for brain metastasis. I'm listing on the right side really what are the regulatory affair development that, of course, are very important for every company that want to go to phase 1 or also to late stage development. So for Pivalate, for example, after our positive phase 2A data, we were able to have a very encouraging pre-IND meeting with FDA about 15 days ago, and they are suggesting to go to IND for a late stage development in 60 to 70 days from now. Our second imaging agent, Rivaexin in pancreatic cancer, already received IND approval in December 2022 to start the phase 1 trial in patients with pancreatic cancer. In addition, in May, we received orphan drug designation that is very important because potentially can accelerate the clinical development. And then we have the two therapeutic agents. The first one in patients with non-small cell lung cancer. The phase 1 will be performed in Australia, and we are very close to submit to the ethics committee to start the phase 1. And the second one is a single domain monoclonal antibody in breast and gastric cancer. We plan to do the study in the US, and after a positive Type A meeting with FDA, we are now planning for IND approval to start phase 1. So if this is really the basis of all our interaction with the regulatory agency in the US and in Australia. And this is really allowing us to go to the clinic, to the next step of clinical development. For Pivalate, by the end of this year, so by the end of December 2023, we expect to be in late stage development. For our imaging in pancreatic cancer, not only we plan to start, but also we plan to finish and to have a readout of our phase 1 clinical trial. And our two therapeutic products will be in human and in clinical trial by December 2023. So it's really transformational 6 months from the company, where we are going from interaction with the regulatory agency to really advance or starting our clinical development. So, but what is the potential of the molecule that we have in the pipeline? Well, we have, for the two imaging agents, we have an external assessment. Nothing that we did, nothing that we influenced, was really independent. For the two therapeutic, we don't have it yet. But no, I'm pleased to say that external assessment really see high potential in our imaging agent. For the brain metastasis, it is assessed above $350 million per year. And for the pancreatic cancer, close to $250 million per year. So is $600 million per year from the two imaging agents, assessed from independent external review. Now, for the two therapeutic, we don't have yet those assessment, but usually therapeutic has a potential that is between 3 to 10 times higher than compared to an imaging agent. So that's why those are our priorities, because we believe, but not only we, really think that these technologies can make the difference for patients living with cancer, either from an imaging and better diagnosis or from a therapeutic point of view. And so we are excited about the next 6 to 12 months. We have clear priorities. We have secure our supply chain. We expect to have continuous news flow to the investor about our progresses, including our decision to go for a dual listing on the NASDAQ, and the process is proceeding very well without any any problem or any challenge. So yeah, exciting times, and thank you for listening to me and for having me part of this important communication. Thank you very much.
Thank you, Ricardo. Let's now give a warm welcome to Chimeric Therapeutics, ASX ticker CHM. Chimeric is a biotechnology company at the forefront of cell-based immunotherapy. Today, we have Jennifer Chow, the CEO of Chimeric Therapeutics, joining us. Jennifer's strategic vision and dedication to scientific advancements are paving the way for groundbreaking treatments in oncology.
Hi, I'm Jennifer, CEO and Managing Director of Chimeric Therapeutics. Thank you so much for taking the time to let me introduce Chimeric to you today. Chimeric Therapeutics is a clinical stage cell therapy company. We are the only clinical stage cell therapy company today on the ASX. We currently have 3 ongoing clinical trials. We've already seen initial positive data in 2 of those trials. We have near-term clinical milestones, and our pipeline and our portfolio offers significant commercial opportunity. Our team has the experience and expertise needed to develop our assets and move them forward to commercialization and see value. So cell therapy. Really, cell therapy is the new type of cancer therapeutic. The history of cancer therapeutics, we introduced chemotherapies, targeted therapies, and immunotherapies over the course of the last 60, 70 years. With all of this, we've really improved outcomes for cancer patients, but we haven't really been able to use the word cure. It's only now with cell therapies, and very specifically with CAR T-cell therapies, that we are seeing patients' cancer completely go into remission for more than 10 years. And our clinicians and scientists are finally saying that we have a curative therapy for some types of cancer. Not surprisingly, with this type of outcome, cell therapy is anticipated to be the fastest growing market segment in oncology over the course of the next 5 years. So we're very much poised in an area of development that is offering incredible outcomes for patients and an incredible amount of growth for investors. Chimeric has what we call both personalized or autologous cell therapies, as well as off-the-shelf or allogeneic cell therapies in our pipeline. 1101 comes to us from City of Hope in California. 2101 comes to us from University of Pennsylvania, and our NK cell platform, Case Western. I'll give you a quick intro to each of our assets. CHM 1101 actually is targeting, at this particular time, patients with glioblastoma, one of the most deadly cancers out there. And really only 5% of glioblastoma patients survive more than 5 years. So very high unmet medical needs in glioblastoma. But we also know after glioblastoma, we can develop this asset in other solid tumors. This asset is currently in a phase 1A clinical trial, a 4-dose level trial at City of Hope. The first 3 dose levels have been completed, and patients are now being enrolled in the 4th and final dose level. We've seen data from the first 2 dose levels that was already incredibly promising. We've seen a 70% disease control rate with up to 3.5 months of disease control with no safety issues whatsoever. Very recently, in the course of the last couple of weeks, Chimeric has actually announced the opening of the phase 1B trial that will actually build upon that first trial. This is a 2-part trial where we're going to do dose confirmation. And then at the end of this year, we're going to take a look at all of the data that we have, do a safety and efficacy assessment. And if everything looks good and positive, we'll continue to move on to Part B, the dose expansion. So we've already completed a number of major milestones this year opening the trial. We're looking forward to the end of this year where we'll have a key clinical milestones as we look at that data. CHM 2101 was designed at the University of Pennsylvania for patients with gastrointestinal cancers like colorectal cancer, gastric cancer, gastroesophageal cancer. And this particular asset they worked for over a decade to optimize. So we're very excited to be able to move this one into clinic. What we've seen so far is the preclinical data, and that data was published in Nature Cancer last year as the cover story because the data was so profound. What we saw was in 7 different types of cancer that the complete eradication of all the cancer cells with absolutely no relapse. So very promising efficacy with safety. And so we saw absolutely no safety issues. This particular asset, our team is now working towards taking into clinic, and we're very excited to be working on filing our IND to open that trial. The last piece of our portfolio is our NK cell platform. And this is a platform that can be used to develop multiple different types of new therapies in many, many different disease areas. This asset has also been already looked at in a phase 1A clinical trial, and you see the outcomes of that trial highlighted here. Importantly, we were able to establish safety within the trial, and we were able to see the cells persist and expand, which really just means that they were able to continue to grow and expand, and that's important to let them do their job. We saw solid tumor efficacy with about a third of the patients achieving disease control, but really promising 100% disease control in our blood cancer patients. And you see highlighted on the right, one of the things that really is quite incredible. We have a patient from this trial that went into complete remission, meaning all of her cancer disappeared, and she's been in complete remission now for more than 2 years. So really promising. Based off what was seen in this trial, we moved to open a second trial, and that's putting the NK cells in combination with an agent called vactisertib. And that trial is now open at Case Western in Ohio in the United States as well. So with all of this, I'm sure I talk quite quickly, but with all of this, we believe we have an incredibly advancing pipeline with very transformational potential. We have 3 trials now ongoing in 5 different disease areas and more planned to be open in the short term. What that gives us from a future commercial opportunity, you can see highlighted here, is over $25 billion of commercial opportunity across these different assets in these different disease areas. And all of this would not be possible without a team that really understands development in cell therapy. Cell therapy is a very unique space. Our team has over 75 years of experience in this space, and we've actually taken 4 of the 6 FDA-approved assets through development to commercialization. We've set ourselves a number of very ambitious goals this year, and I'm pleased to say that we're meeting them. So you can see highlighted in green the ones that we've already met this year. As we continue to move forward, our focus is on advancing our clinical programs and continuing to meet our clinical timelines and milestones as we move forward. So with this, I believe that Chimeric offers an incredible opportunity with an innovative, diversified pipeline and portfolio that's already shown early clinical promise. We have near-term clinical catalysts coming, importantly, in sort of this next 6 to 18 months, and a team that's proven themselves with the experience and expertise needed to be able to develop these assets and take them forward to the patients that need them the most. With that, I thank you very much for your time and your interest in Chimeric. I invite you to our website, www.chimerictherapeutics.com, to learn for more information, or please feel free to reach out to me. Many thanks, and thanks very much for having me today.
Thank you, Jennifer. Let's now hear from Arovella Therapeutics, ASX ticker ALA, a biotechnology company focused on developing therapies to treat human disease. Leading Arovella Therapeutics is Michael Baker, the CEO. Michael's deep understanding of the biotech landscape and his passion for helping patients have positioned Arovella as a promising player in the field.
Hi, I'm Michael Baker, and I'm looking forward to taking you through the story of Arovella Therapeutics. We're listed on the Australian Stock Exchange under the ticker ALA, and we're developing an invariant natural killer T cell, or iNKT cell platform for cancer treatment. I will be making forward-looking statements, so please do take note of our disclaimer. Now, I'd like to jump straight into the highlights of our company. As I mentioned, we are working on an iNKT cell therapy platform, and what this does is it gives us the ability to use this product off the shelf to treat both blood cancers and solid tumours. Our lead product is called ALA-101, and it's a potential treatment for CD19 producing blood cancers, and we're expecting to take that into clinic in 2024. Now, we believe that the cell therapy market is a really important paradigm shift in cancer treatment, and we believe that our iNKT cell platform solves many key challenges that currently hamper the cell therapy sector. We also have an excellent team at board and management level with excellent activity and experience in drug development, particularly cell therapies. We have acquired things strategically and will continue to acquire new technologies that align with our our focus areas and strengthen our platform. And for all these reasons, we do believe that Arovella is uniquely positioned as one of a handful of companies globally working on iNKT cells and the only company in Australia working on an iNKT cell platform. So as I mentioned, cell therapy has revolutionized cancer treatment, and we saw this culminate in a couple of studies last year, where in February and May, there were adult cases and pediatric cases demonstrating patients that took these types of therapies more than 10 years ago experimentally were cancer-free. So we're starting to use the words cure and cancer in the same sentence. The cell therapy market is also expected to reach more than 60 billion by 2030. And you can see here two of the earliest products, Kymriah and Yescarta, approved in 2017, one doing just over 1.1 billion in sales, the other doing over 500 million in sales in 2022, and a more recently approved product doing just under 400 million in sales in 2022. So the challenge with cell therapies is that there are a number of issues that we think we have been able to solve with our iNKT cell platform. The first is currently the therapies must originate from the patient. So this means that they actually take blood from the patient and use that to make the product. It results in high manufacturing costs. The material has been compromised because the patients actually have the disease and have been exposed to chemo. And it means also not all eligible patients can be dosed because not all centers can collect and manufacture the therapy. It also takes quite a long time, in the order of 4 to 6 weeks. Whereas for our iNKT cells, they will be able to be used by starting with a healthy donor. And we believe that goes a long way to solving the manufacturing logistics issues, but we also see there's potential for improved activity. So just briefly, iNKT cells sit in the middle of what are known as T cells and NK cells. Now, T cells and NK cells are the therapies that people most well know due to their prevalence, but both come with a range of drawbacks. T cells have unwanted side effects, and to give them from a healthy person to another cancer patient would require complex gene editing. Natural killer cells, on the other hand, they can be given from a healthy person to many people, but we've seen limited persistence, which we think limits durability and sustained anti-cancer responses. So iNKT cells, on the other hand, actually sit between T cells and NK cells. As I said, we can give them from a healthy donor to many patients that naturally target and kill cancer cells. They take the properties of T cells and NK cells and have both. They also shape the host's immune system to fight off pro-cancer factors and also signal to the host's immune system, telling the T cells and NK cells to get involved in the cancer fight. Now, in addition, the potential of our CAR-iNKT cells is also untapped. So we see that in the T cell space, this is just a snapshot, and also in the NK cell space of some of the players that are currently in this sector. And you can see that there's quite a lot, and there's probably hundreds of companies and thousands of clinical trials. Conversely, for the iNKT cells, we actually see it's only a handful of companies working in this space. So we are one of the most important paradigm-shifting cancer therapy modalities, and we've also carved ourselves a niche in that sector. So to make our therapy, what we do is we start with a healthy donor. We collect their blood, we isolate the iNKT cells, we then genetically reprogram them to produce what we call a CAR, or chimeric antigen receptor, and that acts like a missile to go and target and kill the cancer cells. We then grow them into the billions. They then get vialed, stored frozen, and when patients are eligible to take the therapy, we can give them to them as needed. So this means we have a healthier starting product because it comes from a healthy donor. It is scalable, so we can make multiple doses per batch. It gives patients faster access to treatment and, of course, removes any risks of manufacturing run failure. So in our pipeline, we currently have a range of shots on goal. We have our CD19 targeting ALLO-101 to treat non-Hodgkin's lymphoma. We've also partnered that with another biotech company, Imugene's Oncolytics platform, which opens up treatment opportunities for solid tumors. And we've also got our third product, DKK1 iNKT cells, which we believe has data to support use in activity against multiple myeloma and a range of solid tumors. Importantly, we can actually choose the CAR that we'd like to put into the iNKT cells. So this is a genuine platform and enables us to go after more blood cancers and solid tumors by creating or in-licensing novel chimeric antigen receptors. So over the next 12 months, we've got quite a busy schedule. We're intending to take our first product, ALLO-101, into clinical trials, and we're continuing to assess novel complementary technologies that expand the use of our iNKT cell platform to treat solid tumors. So we've got a range of activities for ALLO-101, complete process optimization, and scale up the GMP manufacture for clinical trials and can prepare all the components for that study, as well as finalize the clinical trial plan. And in the first half of next year, we aim to produce the material and complete the necessary regulatory steps to start a phase 1 trial. For our platform, we also will continue to work with Imugene to confirm the activity of our product with their oncolytics platform to target solid tumors. And we'll also analyze novel CARs, as well as further understand our cytokine technology that we currently have under option from the University of North Carolina. Now, it's important to note that in the cell therapy sector, there's been quite a lot of activity despite the suppressed sector overall in the last 24 months. A number of these deals have taken place in the preclinical setting, which is where Arovella currently sits, and a number also in the phase 1 setting, where you can see there's many deals, and that's where Arovella will be headed next. So you can see for the upfront payments for some of these deals, they are quite substantial, ranging from 70 to 100 million to 245 million upfront. And again, it's encouraging given Arovella's current market cap is at about 42 million. So just noting that, and in terms of our financials, we are valued at about 42 million. We have about $7.1 million cash in the bank, but we are currently underway through a share purchase plan to raise an additional $1 million. So we are well funded. We have excellent shareholders on our register, most well-known merchant funds who have an excellent track record in biotech, but also a number of supportive institutional and high net worth individuals. So we have had a very strong start to 2023. We've seen quite an increase in our share price and our valuation, and we're looking forward to continue to deliver on that as we advance our therapies in the fight against cancer and to deliver shareholder value back to our shareholders. And with that, I'd just like to say thank you again for taking the time to listen.
Thank you, Michael. Our next presenter is Osteopore, ASX ticker OSX. Osteopore is an innovative medical technology company specializing in regenerative solutions for bone healing. Joining us is Mark Long, the executive chairman of Osteopore. Mark's leadership has been instrumental in driving the company's growth and ensuring that patients worldwide can benefit from their groundbreaking technologies.
Hello, my name is Mark Leong. I'm the executive chairman of Osteopore. Very excited today to share a bit about what we do. We are a Australian-Singapore company. The technology comes from Singapore. We are in the medical regeneration space, tissue regeneration in particular. We harness the body's own natural ability to regenerate its tissue. We are the world's first company to successfully develop and commercialize 3D printed bioresorbable implants for surgery, which reduces complications and other kind of issues that you have when you do permanent implants, like infections and things like that. Let me explain our technology a little bit. We 3D print our implants. There are two unique parts to it. One is we use a unique material called polycaprolactone that is bioresorbable. What that means is that it is proven to be safe to put into the body, and over time, it dissolves harmlessly into water and carbon dioxide over a very consistent time frame. The next thing, which is very important, which is our intellectual property, is that we are biomimetic. What that means is that our 3D implant designs are able to mimic the microstructure of the tissue we are trying to help you grow. So in the case of bones, we are able to mimic the microporous structure of bone. So what happens if, again, focusing on bones, our technology can help regrow soft tissues like tendons and ligaments and cartilage. Putting that aside, talking about bones, if you've got a hairline crack, no problem, your body can patch that fairly easily. If you've got a big crack, you lose a bone fragment from an accident or bone cancer or bacterial infection, you need something to bridge that gap. Currently, without the use of our wonderful revolutionary technology, you use permanent implants like metals and plastics, titanium. What people don't know is that you've got a risk of up to 33% of complications and infections over a 10-year period. So you've got a good chance you're going to go back and redo the surgery again. You could do bone grafts, not always applicable, but if it is, you still got a 19% risk of complication and infections. There is always a chance that the body will absorb the bone graft, so you're back to square one. So if you use our implants, you put the implants where the gap is. Our implants act as a bridge, as a scaffold. Your body recognizes, hey, it's almost like bone, and then it creates the perfect environment for your body's own natural regeneration abilities to regrow the bone over and through the implant. Once the bone regrows, implant dissolves, what you have left is your own healthy bone, right? So it just brings you back what it was. So that's why it's the best solution. Is negligible risk, 0.01% risk of infection or complication. It is the best possible solution in our view. So we print standard off-the-shelf shapes that surgeons can use. We also can print highly customizable implants. You know, we could print half a rib cage, half a jawbone, a skull, no problems. What is good and important to highlight is our technology is actually validated. You know, it's not just proof of concept. We have got key regulatory approvals in major markets: US FDA, European CE, TGA in Australia, Singapore, and many key markets. We've done 80,000 cases, so it's not unproven at all. We have patents. We have started sales, right? We started commercialization. We are selling in 25 countries in every continent, and we've got tons of papers published on our technology. We do 3D printing, so it's highly scalable. We enjoy very good margins. We enjoy margins above 70%, and that is on a distributor model. So imagine if we go through direct sales, the margins and sales would go up considerably. Give us a, let me show you some short video, 2 minutes. It really gives you an insight of what we do.
First patient to undergo the procedure after contracting a bacterial infection in his leg.
It's eaten through the entire bone pretty much. We're going to have to probably amputate it. And then they said there is an option, the people at the PA are doing something that experimental.
Now, nearly 4 years on, his tibia in his leg has regrown.
Not long ago, we would have balked at the idea of 3D printed body parts, but it's no longer science fiction.
The second patient in the world to have a 3D printed implant in her leg to help regrow her own bone. Scaffold for Ash's surgery was printed by Australian-Singaporean company Osteopore. The doctors were amazed with Ash's progress. She was able to stand and even navigate stairs weeks before it was expected.
I want to pursue medicine, and I know that because of this, I really, really, really want to. It just seems like every day, watching my scars heal and the changes in my body.
The 28-year-old from Cannon Hill has 20% vision, one leg, a crushed skull. He still thinks he's lucky despite the accident in Vietnam, which should have killed him. Brodie was the first person in the world to have an Osteopore implant, which dissolved when his skull regrew.
Being the guinea pig for it has definitely paid off very well.
Brodie wants to represent Australia.
Shoot for the stars.
Or higher.
So I hope that gives you a good insight of the kind of work we've been doing. Look, we have done many worlds first. We have grown, doctors are happy with 1-2 cm of bone regrowth. We have done 36 cm shin bones. We have helped patients regrow their bones after they got cancer, right? So we have proven the regenerative abilities of our implant to complement the body natural abilities. And this is something I'm very proud of. What we're really trying to do now is not be just world's first. I think our products deserve to be the first option for every patient out there. And that's part of our commercialization activities that we're undergoing right now. Very quickly, this just gives you a quick snapshot of the global footprint that we have, regulatory approvals and sales as well. For 2023, obviously, as a listed company and going through our commercialization phase, we are looking at growing revenue. So we are looking at 3 major product segments. The first segment is really our craniofacial market, right? We started with that, and that takes up half of our revenues. It has lots of approval everywhere, so that's going to keep growing. Another segment that we're really excited about is the aesthetic segment. We are doing very well in our rhinoplasty nose drops. It has grown very quickly on a very small scale, and it's grown greatly in just 10 countries. We have almost caught up to the sales of the craniofacial. It's doing very well in Korea, which is the aesthetic capital of Asia. So we have great hopes for that. We are doubling down on the aesthetic market. So we did our first acquisition a few months ago, buying our top distributor, who is our aesthetics distributor. So we are all in, right? There is more revenues and margins you'll get from this acquisition, as well as getting to work with the sales team that is very good at selling our rhinoplasty products and going deeper penetration. And last but not least is our dental products. We have great hope for that because it's a huge volume market. We are doing a dental implant socket preservation. We help regrow sunken tooth and material that when you lose a teeth, it tends to recede. Our implants have shown that we could help regrow that really well. So that's another big volume seller they are looking at that we think will give us good revenues, maybe in 6-9 months from now. So a quick update on since the last time I actually spoke on wholesale investors, various platforms. We announced recently a quick shortfall placement of about $1 million, and it was fantastic. I thank everyone who subscribed for this. We managed to close it in 5 hours. It's a few times oversubscribed, so there was good demand for this placement, and we are grateful. We recently announced a collaboration with a Chinese partner who will put 4 million into this exercise to get into China. So we are making inroads into China, which is very, very exciting. In South Africa, we have had great progress. It's becoming a very good market. We got good sales, good traction in, and we got onboarded by the biggest private reinsurance company there. And as far as on the regulatory side, we are one of the first companies globally to get the new European certification mark to sell medical devices. It is a very arduous task, and we are one of the early ones to get it. So this shows our commitment to make sure that our products are at the forefront of regulatory approvals. And yeah, so sorry, thanks for listening in. I think most of you are quite familiar with our story. We are established pedigree, breakthrough technology that works. We have huge addressable markets globally, and look, we are a very de-risked investment proposition. We got the technology, we got the clinical data, we got the intellectual properties, we got the regulatory approvals, and we're starting sales. So happy to always welcome more interest in our company. My website has my contact details. Drop me an email anytime, I'll reply. And thanks for listening. Thank you very much.
Thank you, Mark. Let's shift gears and turn our attention to Camplify Holdings, ASX ticker CHL. Camplify is a trailblazing peer-to-peer recreational vehicle sharing platform. Please welcome Justin Hales, the CEO of Camplify. Justin's entrepreneurial spirit and innovative approach have positioned Camplify as a disruptor in the RV industry, empowering people to create unforgettable outdoor experiences.
Hi there, I'm Justin, CEO and founder of Camplify. Today I'm going to present to you a presentation on what is Camplify, provide you some information about our performance over the last little while, and provide an update on our business in Europe, and some market overview and where we're going from there. So a bit of an introduction. We operate as CHL code on the ASX. We have 3 brands under that. Camplify is our first brand that we started here in Australia and expanded internationally. We've since acquired a brand called Paul Camper, which is the biggest operator in the European market. Subsequent to that, we've actually set up our own insurance MGA, and that's branded My Way. That's the insurance provider to our customers through both the Camplify and Paul Camper platforms. So what is Camplify? Well, we are a digital marketplace. We provide all the things that our customers need to be able to transact. So we enable the connection between someone who owns a vehicle and someone who wants to rent that vehicle. We provide all of those things that those two parties need to be able to provide a safe and secure transaction. So that includes the rental marketplace, the terms and conditions, the contracts, the roadside assistance, the insurance, the payment, the bond management, and the customer support. So without us, those two parties really can't transact. We are the sort of glue that holds this connection together. And because of that, we're a critical part of the overall process that exists between these two parties. That's why we have such a good take rate, and it's why we have such low leakage off our platform, because we provide the end-to-end customer solution. So our strategy really is to become the leading RV rental marketplace and grow our fleets, and do that through a platform that delivers scalability and an amazing customer experience. Our customers come to us because traditional RV fleet company, such as Tourism Holdings, you may be familiar with, they operate in an environment where they're centralised around an airport. They really service a specific market, generally an inbound customer, and they have a limited fleet of vehicles for a set price. We have a huge network of vehicles with lots of different types of vehicles for lots of different types of prices in a highly distributed environment. We predominantly service, generally speaking, the customer who is looking for a domestic tourism environment. So we have a much better product that's specifically built for that type of customer. A great example I always use is that if you're in Sydney and you're looking to rent a vehicle and you live in Penrith, to access a traditional fleet operator, you would need to drive all the way to the airport. You would need to pay a premium of, roughly speaking, $250 to $300 a day to rent a motorhome. Whereas with Camplify, you might have someone in your local area within 10 kilometres who can rent you their vehicle for $150, $160 a day. So it's a big improvement on the traditional operators for that type of customer. So if we have a look at our quarterly numbers, which were just released recently, so during that quarter for Q3, we transacted 48.1 million. So that's an increase on the previous year period of 269 million. Our total revenue was 12.5 million, an increase of 204%. We have over 26,000 vehicles on our platform across those countries, and our take rate is 26% of the transaction. So importantly for us, when we look at take rate, the traditional Camplify business, the take rate from that business during the quarter was just over 30%, and the Poor Camper business was a lot below that. It's closer to sort of 18, 19%. So our sort of journey that we're on at the moment is to migrate that business to our platform and implement some of those products into that business so we can see their take rate increase to that similar take rate that we have at Camplify. An important marker for us is future bookings, and future bookings are bookings that customers have paid for in the platform, but those bookings haven't started yet. So they're future income to come in and be recognised through the platform. It's a great way to see the velocity in the business, and it's a great way to see how customers are actually looking at future travel, and so consumer confidence. So you can see that in quarter three this year, we ended the quarter with $25.8 million in future bookings. And the previous quarter last year, we were at 12.1. So huge increase in that, 114% growth. And it actually shows that consumers are looking to book and they have confidence in booking in this next 12-month period. So if we have a look at some of the numbers that we see as an overall sort of basis for our business, and these are from our first half results in FY23. So average booking value was $17.99. That means that there's a cut per booking to Camplify of $473 in revenue. 23% of our customers are customers that have travelled with us before and are rebooking. We see a higher percentage of that in the Australian market because we have customers that will go on that journey regularly. It's generally a little bit lower in markets such as New Zealand, which is more of a destination-based business where customers may only go into that market every couple of years to book that. Our platform has grown our total bookings by 62%. We've grown our total customers quite significantly. We've grown our fleet quite significantly. So we're seeing all of those key metrics that we look at as really providing excellent progression. So overall, business is in a fantastic shape, and the markers that we're seeing from customers about our business is continuing to grow quite significantly. You can see here that what we're actually seeing is that customers are booking longer bookings, so the average days are going up. Our total booking value per book day is going up, so the rate per day is going up, and that's leading to an average booking value that is higher. So not only are we seeing more volume, but we're actually seeing that customers are booking longer bookings at a higher value per booking. We've continued to dramatically scale our customers and huge growth in both our hirers and our RVs on the platform. Some of that is through the acquisition, but we have extremely strong triple-digit numbers in most of these through organic in the markets that we're operating in as well. So when we have a look at our gross transaction value, you can see that CAGR is growing quite significantly. Importantly, when we look at these numbers here in particular, these only include 1 month of transactional data from the acquisition of Paul Camper. So the majority of these numbers are Camplify specific. So they actually show true growth through organic activity that we're seeing through Camplify. So looking at Germany and that acquisition that we made, so it really, for us, we see it as a business transformational acquisition. It allows us to leverage the great work that our team does, the work that our platform does, and it allows us to be able to take those things and implement them into the biggest market with the strongest performer in the European market. So Paul Camper has been around for a long time. They're a business that started 13 years ago. They've got a great team of people, founder-led, and they really have positioned themselves in the leading market as the leading operator by a long way. They have expanded into Austria and the Netherlands in particular, and we've seen that this acquisition, we can see a lot of upside in the business. We see that we can get a lot more growth in the business, that there's a lot more opportunity for us to grow their revenue through our existing products, to move that take rate, but also to leverage the investment we've already got in our core business. So our platform, our team, to be able to really continue to scale and see continued performance markers and that real connection through to our expected FY24 profitability through this scaling. So we're really well positioned in the EU now. It really has created a beachhead for us. And through the project that we're working on with our insurance MGA business, it will allow us to leverage both the technology platform, the team that we have in Europe, and the insurance offering to be able to launch into other European countries in the not too distant future. So just a bit of a background on the Australian market so you can sort of understand where we are. So in Australia, there's roughly 800,000 vehicles. We have around 9,000 registered on the platform in Australia. So we have a huge amount of growth to continue to do. When we look at how many trips are consumed in camping in Australia, it's 15 million. We've obviously consumed a very small percentage of that. So our goal really is to introduce people who are going away in the camping environment and say, why don't you trade up and take an RV instead, because it's going to be a much better experience for you. Customers in Australia spend over $10 billion annually on drive holidays. So we know that there's a big opportunity to continue this growth massively in the Australian market. Look at the European market, 5.6 million RVs, 0.4% of them are listed on a platform for rent at the moment. So a huge opportunity. We're really positioned ourselves well in that market. We see that the demand is growing quite significantly, and this really is a trend in market. So now we feel as though we can be really well positioned to take a hold of this European market in the next few years. So looking at how we focus our efforts onto marketing, really we're a very efficient marketing engine, and we do that through multi-channel marketing. And that multi-channel marketing allows us to really focus our efforts on customer acquisition cost. So for us, customer acquisition cost is a key driver that allows us to be able to leverage the investment we've got in our platform and the team that we have. We do it really well. We make camping and caravanning sexy. We want to make sure that people really want to go on this type of trip, and it's a highly desired thing to be able to do. And we're doing that extremely well as being able to make sure that our owners see us as a safe and secure platform to be able to leverage. So we're really focused on how we can get the most out of the platform. The platform is the driver for us. We are at our core a tech business. We are a software business, and we utilize that technology to enable tourism. Our entire platform has been built from end to end. It's been built with predominantly the owner in mind. We want to make sure that they have the best process possible right through from listing to managing all the booking flows that come in. So technology is owned by us, it's built in Australia, and it's able to be then leveraged and get through to the other countries that we're operating in. We're always looking at how we can evolve and get better and better options for our customers and more products. I'll just really focus on one, and that is our accident excess reduction. So during this period, we made a change to our fees. We actually reduced our commissions that our hirers were paying, and we implemented an insurance product, which is called accident excess reduction. It's a risk product, and it allows the customers to reduce their risk and pay down the costs that they have to pay if they have an accident. So what we've actually seen is that the conversion rate from that product, since we introduced this product as a mandatory product, has dramatically increased. So our customers are actually paying to reduce their risk down more as we've introduced and changed this product mix. So we've seen now 40.6% of our customers paying an upgrade to reduce that risk. And that has led to improvement in our overall rates of take rate. So it's really a core thing that we're looking to improve and to roll into these other European countries as we start that platform migration. So look, in summary, we're in a dominant position in Australia, New Zealand, and the German markets. We've got these other couple of satellite markets that we're doing really well in and really expanding into and growing really quickly. We've got one of the biggest fleets on peer-to-peer markets in these markets. But we still have less than sort of 1% of that available market across all those markets combined. So still a huge amount to grow. Still a lot of customers to acquire in the hiring side, and a lot of demand there. We're truly a unique global marketplace and operate in many of these countries. So we have good spread around all those different markets and different seasonality. We've got really attractive unit economics, high take rate, strong average transaction value, and a strong customer acquisition cost through to our lifetime value recognition of that particular customer. We've got consistent numbers of growth, and we're at this scalability level as well. So, the sort of perfect storm for us where we're seeing that investment pay off, we're hitting good numbers, and we're still seeing continued growth numbers, which is good. We've got a really experienced board. We've got people that have been involved with Camplify for some time. We've got industry experts from both the tourism, from marketplaces, and from rental fleets. And we've got our global insurance product coming very soon, which will enable us to be able to leverage all of those markets, leverage that insurance product, and really continue to see some strong growth numbers in all those markets. Thank you very much. Hopefully that's provided you with a great understanding as to where Camplify is at, and we look forward to providing you with some more updates soon. Thanks.
Thank you, Justin. Now representing Carly Holdings, ASX ticker CL8, we have Chris Noon, the CEO. Carly is focused on revolutionizing the automotive industry through its innovative vehicle subscription platform. Chris's drive to reshape mobility and deliver flexible car ownership options has positioned Carly as a key player in the rapidly evolving automotive landscape.
Good afternoon. My name's Chris Noon, CEO of Carly Holdings Ltd, ASX code CL8. Today, we'd like to talk to you about our car subscription business, Carly Car Subscription. We're an early mover in the rapidly developing mobility markets in Australia and also overseas. We're proud to have major shareholders and strategic investors, including SG Fleet, Hyundai, Turners Automotive, and RACV. We are the only ASX-listed company focusing on the car subscription and electric vehicle opportunity in Australia. Car subscription is an ideal opportunity for people seeking more flexible access to cars. We launched Carly in March 2019 after pivoting from an adjacent business. Car subscription is the use of a car without long-term debt or finance. It's a simple monthly recurring payment that covers all expenses, including insurance, registration, roadside assistance, and also maintenance. And it's a flexible alternative to outright purchasing or financing of vehicles. We see the car subscription as a very large opportunity. Our research shows that 38% of Australians are interested in subscribing to a car, and that increases to 69% of Gen Z and 50% of millennials. Globally, car subscription is expected to be a $100 billion business by 2032. Carly has over 10 years experience in the automotive industry with extensive industry partnerships and also exclusive technology. We're already established in key positions in the consumer, business, EV, and software licensing markets. We have two models for supplying vehicles to our customers. We have the direct model where we own the vehicles and subscribe them directly to our customers. We've recently secured a $10 million finance facility, taking our total vehicle financing facilities to $13.2 million. We also operate on a partnership model where vehicle manufacturers and automotive dealers provide vehicles to us on an asset-light model. This allows us to experience the best of both worlds by directly controlling cars, but also leveraging vehicles owned by other entities. We've been growing very strongly, both through COVID and also after. In the most recent results in March, we saw a 76% increase in revenue and also consistently achieved a very high vehicle utilization. Most recently, 88% of our fleet was on the road generating income. A car subscription is a flexible way for businesses and consumers to access vehicles. It's one simple monthly subscription fee. It includes registration, insurance, maintenance, and roadside assistance. The car is exclusively the customer's to use. There are no break fees. It's a minimum 30-day term and 30 days notice to cancel. The customer also has the ability to switch the vehicle if their needs change. Most importantly, it's not long-term financial commitment or debt. One of the best ways to describe car subscription, where it fits in the market, is the average subscription period. Our period is 5.3 months, very different to car share, which is 1 hour to 1 day, car rental, which is 1 to 14 days, and also a lot shorter than long-term purchase, finance, or leasing. Importantly, car subscription is much cheaper than car share and car rental and compares favorably to the longer-term options. Carly's seeking to be number one in a number of different markets. We're seeking to be the number one car subscription company in Australia. We're already well established on the East Coast, playing in the EV market. We've secured asset finance to grow our fleet, and we have very strong strategic partners. We're strong in the consumer market, and we are also a very strong online proposition with very low cost of acquisition. We have extensive strategic relationships. SG Fleet, the largest fleet management and leasing company in Australia, is our second largest shareholder and refers business and government customers to us. We're also an early entrant into the electric vehicle market and have a very strong relationship with Hyundai, which provides both petrol and electric vehicles to our fleet. We've also partnered with the likes of Turners Subscription in New Zealand and Hyundai to help them monetize their vehicles in the car subscription market. Where we're going next is that we look to expand our geographic coverage beyond the East Coast of Australia and grow our fleet size. We look to expand our position in the consumer market by moving into more mass market advertising mediums, leveraging AI for our customer service and marketing operations, and expanding our online referral partnerships. We also want to leverage our relationship with SG Fleet to push further into the government and business markets. We will also be recruiting our own corporate sales team. There is a massive opportunity for Carly to expand in the electric vehicle market, both with Hyundai and also by buying our own fleet of electric vehicles. We also look to secure more manufacturer and automotive dealer partners to provide vehicles into our fleet. And we've also launched our own web app called Carly Now, which will allow us to provide extra services to Australia's automotive dealers. And across all of these different opportunities, there is a massive opportunity for Carly to become the try before you buy proposition for electric vehicles as businesses and consumers move from petrol vehicles to electric vehicles. Our results have been very strong. In the most recent reporting period, 76% increase in revenue, which was a 25% increase in our annual revenue run rate. We've achieved this with 0% increase in our costs. We've also achieved a very high 88% vehicle utilization, and we've brought down our marketing costs at the same time. Our strong revenue can be seen in the graph below. What we've been doing is growing revenue every quarter and been growing revenue as a percent of transaction value as well. We've been doing this because we've been changing the composition of our fleet. We've been increasing the number of owned vehicles in our fleet in proportion to the asset-light vehicles. And these owned vehicles generate more revenue per day and per vehicle than our asset-light fleet. And we will continue to adjust the composition of our fleet according to the market conditions. The lifetime value for our product has also continued to grow, both at a transaction value level, but also more importantly at the revenue level. Gross profit has also been increasing on a regular basis. At the same time, we've been decreasing customer acquisition costs. We've just announced the launch of Carly Now, which is an app that allows automotive dealers to subscribe any car in their inventory to customers on the fly without them having to set up their own subscription fleet, their own insurance, marketing, or payment systems. They leverage all of the systems provided by Carly. We've also just recently announced a $10 million asset finance facility, which is allowing us to dramatically increase the size of our vehicle fleet. We expect to be able to purchase up to 450 vehicles with this facility. We have delivered over 42 vehicles up until the 2nd of June. And until the end of June, we expect to deliver another 30 vehicles to our fleet. And we'll continue purchasing vehicles throughout the year. Carly has a number of competitive advantages, over 10 years experience directly in the car subscription business, but also in related industries as well. Strong strategic relationships with an online customer acquisition model, which is very low cost. A mass market proposition that appeals to both consumers and also businesses. We're aligned with the growth in the electric vehicle market. And our product is not a long-term financial commitment or debt. It suits the needs of many businesses and individuals. We generate both direct and partnership revenue. We are in control of our own revenue generation, but we also clip the ticket for other companies operating in the car subscription market. We're an indispensable partner to any large automotive player looking to enter the car subscription market. We operate our owned fleet, and also we have an asset-light fleet as well. We're leveraging AI and machine learning to streamline the verification process for our customers before we give them access to the cars, reducing our acquisition costs, also increasing our conversion and reducing risk within the business. We also have an exclusive ATO product ruling, which defines the tax deductibility and fringe benefits tax treatment for car subscription, and this is exclusive to Carly and cannot be used by any business or any other car subscription business. Thank you very much for your time today, and we welcome your interest in Carly Car Subscription.
Thank you, Chris. And finally, we have Openn Negotiation, ASX ticker OPN. It is an technology-driven property sales platform. Joining us are Sean Adomate and the CEO, and Peter Gibbons, the Managing Director of Openn Negotiation. Sean and Peter's combined expertise and passion for transforming property transactions have propelled Openn Negotiation into the forefront of real estate innovation.
Hello, everybody, and welcome to this investor presentation on the Openn business. My name's Peter Gibbons. I'm Managing Director of the Openn Group. We're an ASX-listed company with some pretty special technology, which we're rolling out throughout the world, already in 4 countries and growing rapidly. So who are we and what do we do? We operate in the prop tech, the real estate space of the technology industry. We've come up with a very clever platform to assist real estate agents in the pricing of real estate, as well as the management of their offers. Where this is really important, I guess the key problem we were solving was around transparency. And what I mean by that is when you go to purchase a property, you ask the real estate agent, how much do I need to pay? And invariably they say, I can't tell you, but put in your best offer. Meaning you either end up with, congratulations, you purchased the property and you're thinking, how much have I overpaid for it? Or I'm sorry, you missed out, it went for $600,000, and say, well, I would have paid more than that, but you wouldn't tell me. So real estate's one of the last markets in the world that doesn't offer this form of transparency. And with millennials being the largest buyers in the market demand is there for greater transparency. And the other piece of it is the data that is collected in a real estate transaction. It is very haphazard at the moment and fragmented. What we've done is capture all the details associated with an offer and a successful sale through the platform. And that data that we're securing hasn't been seen in the market before and is extremely valuable. So when I talk about the platform and the data, what am I talking about? So we're an online sales platform, but really what we are is an enabling tool for real estate agents to more efficiently run their sales process. We're classified as an offer management platform. So seamlessly agents can receive offers through the platform, sign digitally, and that's capturing every offer that comes in a single place where they can be compared and put the actual buyers, if required, under competitive tension to purchase the property. What do I mean by that? Essentially, the buyers can see far more than they currently get told. And so they can see how many qualified buyers there are. They can see bids as they're coming in, how long the property has been on the market, and obviously the final sales price. And we also allow observers on. So people interested in that property specifically or the process can jump on the platform and observe the sale as it proceeds. And as you can see under the third timeline there, it captures that detail in a very specific manner, all date and time stamped. So you don't only get the sold price, you get a really clear indication of what has happened in that depth of market to secure that property. So here's a quick snapshot. This will be on the ASX for you all to read to get a feeling for the company. We're going about 7 years now. Obviously, it's been a tough time for technology. That said, in that time, we've very, very confident that we've got a very strong upward trajectory now that we've undertaken a capital raise. We're very well placed in the 4 countries we're operating, being New Zealand, Australia, Canada, and the United States. Very well placed to really break into those markets, having proven the technology in Australia. I might just now hand in terms of highlights to our CEO of the Australia-New Zealand business, who's also intrinsically involved in our push to North America, Sean Adamite.
Thanks, Gibbo. So just to recap on a couple of highlights, we do have a world-class offer management technology platform that has got proven product market fit. We've now sold more than $7.5 billion worth of property out of Australia and New Zealand. And we're operational across Australia, New Zealand, the United States and Canada. We have been approached, and there are a number of negotiations that are well advanced around parties that are interested in securing a license to effectively embed our platform into markets and their existing offerings. And of course, the open platform has been designed in a way that it's capable of moving into other verticals, other opaque markets that exist where transparency can substantially improve the way that the market operates. So just kind of to talk to why Openn is such a compelling investment opportunity, a lot of the heavy lifting on the platform development that we've invested heavily in is now complete. And we're in a totally profound position on the basis that we have just launched an integration, a world first integration to my knowledge, of embedding the Openn offer process into the #1 portal, which is realtor.ca in Canada. And you can see an example of that on the right-hand side there. That's never been seen before. So now when you go to that portal as a general consumer, you're being educated about the offers that have been validated by an agent that are coming through on that platform in real time. We have determined as a strategy that licensing is the best approach, and as a basis of that, we're able to operate on a very lean basis, and it has meant that we do not need as many of the overheads and headcounts as what you may have required if we were going to do a direct-to-market approach. And so we've been working on rationalizing the cost base now that a significant and the most important part of the platform development piece has now been completed. So just to kind of give a bit of an overview on what the licensing structure looks like, we are operational in those 4 jurisdictions that Peter mentioned earlier. And then what we'd anticipate is that we would secure an upfront fee from the licensed partner. And as I said, a number of these conversations are already in play. And then there would be an ongoing monthly fee that's captured from that group to help cover some of the costs for us providing the engineering and support of maintaining the platform. That, of course, operates on the basis that the platform is designed in a way to secure recurring revenue through a software as a service offering. And what we're doing to ensure we're maintaining our upside and our exposure to the excitement of what the platform generates, which is why we've been approached with so many interested parties, and is validated by our existing arrangements with some of the top global and market leading prop tech companies in the world, is on the basis of what Openn unlocks in terms of the buyer or user insights that are in the platform. So if you think about a real estate transaction, there is a huge amount of ancillary services, mortgages, insurances, utility connections, those sorts of things that a lot of partners and associated companies are interested in and approaching us with today to try and understand how integrating our platform into their offering can unlock a 1 + 1 = 3 outcome. Back to Gibbo to close off.
Great. Thanks very much for that, Sean. So a really quick summary. We've currently have a underwritten capital raise for $3.3 million with a new cornerstone investor. We'd like to think we're very well placed now to increase our footprint across the world. We're currently generating revenue in Australia. Canada is unbelievably exciting for us. The realtor.ca, which is owned by the Canadian Real Estate Association, basically every agent in Canada is a member of that. We get about 1.8 billion views on the realtor.ca platform, so that's a great way for us to get our message out. We're reduced our burn, as Sean was saying, now that we've completed the heavy lifting on development of the platform itself. We're now looking at partnering and licensing with advanced conversations in those spaces, both in Canada, North America and Australia. We're looking to, as part of those negotiations, secure 2 of those licenses by the end of the year. And that we're also discussing with the US market, particularly, some deeply embedded partnerships around generating further third-party income. We're targeting to break even by December 24, and we're working hard to meet or beat that date. And that will provide us the really good platform for further growth. We've been identified by groups in Asia, Europe, South America, South Africa, who want to license the Openn technology into those countries, which is very exciting. And we've, as I say, almost at a position now that as we grow, there'll be new verticals that we'll be looking into beyond real estate. So thank you so much for your time. We really appreciate it. We'd love to have you as an investor with Openn and continue this exciting journey with us. Thanks very much.
Thank you everyone for joining us for the Small Cap Showcase 2023. I hope you enjoyed the session. I hope you enjoyed the presentations from the CEOs. I said some of the companies, we've been fortunate enough to work with across a few years, and we've seen some incredible growth in what they've been able to achieve from not just a share price perspective, but from a milestone perspective as well. So please make sure that you follow them up, obviously in the CRISP software, or feel free to follow up in your own trading platform directly as well. And then please note that next coming up, we have our Venture and Capital Conference. We do 2 big conferences each year, Emergence and then Venture and Capital. So Venture and Capital is going to be on August 3 at the Sydney Hilton Hotel. It's going to be a 1-day event. We are absolutely jam-packing that event from 9 a.m. to 6 p.m., filled with content from presentations, keynotes, panel sessions, etc. And the two focuses for the event: innovation, obviously on the venture side, and then capital, we've got a strong focus on alternative investment opportunities, which we'll be doing a lot of exploration with. So they're the 2 thematics for venture and capital. I look forward to seeing you on August 3rd. Once again, I hope you enjoyed our Small Cap Showcase 2023. I look forward to seeing you shortly.